The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
It certainly does. So what do we have going on now? Dollar index off 8 cents, no big deal there. But what we are looking at is the S&P's up 21 points. Volume is tepid at 2 billion shares. But what's going on? I suspect the wind up to the FOMC meeting next week. We had one of the biggest tests I think we can have in the market. And so far, I'm looking at this as a successful test in the TLT. We'll talk about that in a few minutes. Still have a little ways to go in it, but I think that that's kind of a nice signal, at least for the next few days. So a lot of stuff going on out here. We want to get into it. In the meantime, we really need to get started with our history.
And it's all just a little bit of history repeating.
On this day in 1890, Baring Brothers, one of England's leading investment banks, has disclosed that it has loans to what we would now call emerging markets like Argentina, Chile, and they've all gone bad, and the banks will go bust unless the Bank of England comes to the aid. Dun, 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 dun. The bank steps in, rounding up a rescue syndicate of other investment banks and assuming £28.5 million worth of Baring's liabilities, thus averted what would have probably been the biggest panic in the world's history this day in 1890. And, of course, every 20, 30 years, this repeats because, of course, everybody gets bailed out. So, what can you say? That's about it. There's not much in the way of news going on out here. Of course, after the bell tonight, the only thing going on out here is Oracle. I am not looking for a whole lot tomorrow. I suspect that we're going to probably be in this 2140 range. Look like the markets were really getting ready to whomp everything. And, well, they gave a crash and no one showed up. But this should not make everybody feel all warm and fuzzy. And the reason why, let's see, what do we have here? Is this TLT? Let me get this thing. It's stuck. There we go. We showed this as one of the biggest things going on in the market. What we were looking for and what I thought was possible was a huge move down. Get a few more out of these. Nope, that's it. We've got a nice confluence range here. Oh, that's why. I need to zoom in here just a little bit closer. But what we needed was some volume today. We did not get it. Confluence went from 133.42 to 133.83. It closed back above that, which I think is fairly possible. Only needed to have less than about 9 million shares on the TLT. Right now, we're cooking with 6 million. So didn't come down. We came down here. We clicked in it. There's some gaps out here. You had 15 million shares to the downside on the 13th. And that is what made me thought that when we got down to this level, it would be able to break through with some volume because we've had volume. Now, does this mean that this thing's going right back up to the top? The answer is no. But it does mean that for at least the next few days, I would say until Wednesday's FOMC, you could easily see this thing get back up to 135.50, maybe even the 136 areas. So look for a bounce, but again, I suspect that we got just about everything that we should expect out of the S&Ps. This does not make anything any better out here. It only makes some things worse. On this test, we did go to all cash today in the daily newsletter. There's some other things going on out here, but it's mostly euphoria, and we'll talk about that. I saw it mostly today in WIN, and that is wild trading ranges. I don't have the intraday out here, but basically it's getting right up to where it should have gone, which is this gap down that goes back to July 7th, 2015. You spiked it, gap down the next day, and it pretty much went into a funk all the way down to October 1st of 2015. The energy down on that leg to October 1st was a great deal more than the bottom on January 14th this year up to this high. So I'm not thinking that WIN has a lot going on here. Again, everybody just moving the deck chairs on the Titanic. I do suspect that we are going to have much lower prices, but it is going to be a little bit tougher out here. But, could we just go sideways for 3, 4, 5 days into Wednesday? I think we can. Like I said, I'm not looking for a great deal tomorrow into expiration or even by the end of the day. I just don't think that sitting here going sideways between probably 2140 and 2150 is going to do much of anything. We were down at the lows. You can look at this also as a test in that 2120 area on lighter volume. But the energy on the way back up should have started to come back in and has not. In fact, it's lighter than the last 3 days before. I just don't see a lot other than a little trading range in here. My hope would be that I'm wrong, that the market goes back higher and that we continue with the same kind of light volume to set up yet another swing and a bite at the apple. I was short the IBB. We got out of that today. We did have a position in the UVXY that we were in at $17, so we got about $5.50 out of that. So it wasn't a week that we went home penniless. I was wrong on the puts on Expedia. That looked like it had a good opportunity to break down, and everybody backed away from it this morning. But the market continues to seem to me extremely heavy, limited to the upside, and we'll see. But somebody asked me about shorting Apple yesterday, and just, there's a handful of stocks that are getting all the action, and between that and the IWM makes and continues to make me think that everybody's getting their deck chairs set up for higher interest rates. And one of the questions I had today was the IWM. Well, if you're looking at the IWM, those kind of companies tend to sell a much more inside the country. And if you're looking at a stronger dollar, it doesn't really affect them near as much as the others. So everybody's got a lot of cash to put to work. They're trying to find places to put it, and there are very few. We'll be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You can email me at path@tfnn.com. And I don't know what else you could say about that. What do you think of the AG and THO charts as a decent entry point? We'll look at AG here. Man, you're pretty close. I would want it to touch this gap on First Majestic. You did test it on September 1st. You're close enough to it. I'm going to say 85% of the chance you're going to test at 1109 in the next few days, and that's where you probably would want to take a look at it. Not a bad day today, a little down on lighter volume out here, but this gap that goes back to the 3rd of June is what you want to be looking at it. Energy on the way down, though, was big. 18 million shares on that September 1st low is high volume. So you're going to at least test the 1109. I can't see you getting into that without it testing it and giving some kind of sign of strength off of that. But that is one. And what else is TAHO? TAHO. Okay, Tahoe Resources. It's another one. These all look like to me that they're coming back to this gap. This one's on the 3rd of June. 2.5 million shares on that day. You haven't come back into this one, but so 1250 is kind of the start of that gap. So I would look at that as where you want to get into this thing. What is that? 6.3, 2.4 million shares. So you will need to get back in there at about 1250, 1225 with a whole lot less than that, which is probably pretty easy, 2.5 million shares. You kind of got into the first bounce off of that. This is going to be the second bounce. You're going to get 2 or 3, I suspect. Chances to buy this at 1250, 1225 in that first and last gap up in this thing. And you can be like Mike and email me at path@tfnn.com. We will get to it. What we were doing. Did I talk about the IWM already? Maybe not. Looks like you've got another great shot at shorting the IWM coming up here. We'll be looking at that. What do we got? Oh, we got 5 minutes in this segment. Got plenty of time. I would suspect that the next move down in this would take you to the 14 area. Got a nice confluence bar that runs from 113.29 to 114.78. A lot of cash trying to come into this thing. Up on light volume today. What I would like to see is maybe over the next couple of days is very light volume back up into the 124 area. This thing came down on 54 million shares on the 9th. You're up into that today with 18 million shares. Man, if you could get 124.50 on this thing and volume remains, 20 million shares or 22 million shares or something, I think that would be the sweet setup out here. Again, I like some of these setups. And again, this one would be very sweet. It's either going to ride this 9-day moving average down. Most likely, I would love for this thing to pop up above it and then close back below it as a great signal that this thing has topped out. I don't see a lot to be rabidly bullish about other than everybody piling into a handful of stocks. That's generally a very good indication that the market is just about over. The other thing is small caps running. And, we did have a pullback here. It wasn't much of one in the IWM. One more nice signal on this thing. You've got 3 gaps that I think could get filled fairly quickly. The one at 114, another one at 110 to 111, and the next one down to 108 into this June 27th low. I'm actually thinking that this would probably get much closer to the 104 mark. There's a nice gap out here, I think 103, 104. But while initially the small caps will be less affected than other stocks by higher interest rates and the stronger dollar, everybody's looking, of course, for the stocks that have the most cash, Apple, some of these other ones, stocks that are mostly getting money from other countries where higher interest rates won't matter, i.e. China, and why wind is overperforming. But almost everything, that is the first chapter. The second chapter is those stocks break and a tide takes all the boats lower. But we shall see. But I think what we're going to find out Wednesday is that they're going to talk very hawkish. They're going to act very dovish and let you know as soon as the election is over, you're going to get a couple of interest rate hikes, probably back to back. And that's probably going to keep a lid on the market. So we'll continue to look at that. As we check out what's going on here, 2151 on the S&P cash, up 25 points in the, but no volume, 2.15 billion shares so far. So this would not be a sign of strength other than a bounce off that bottom. And like I said, for me, taking a swing here, probably not too good. We got another email. Anybody in the den with anything? Oh, the market won't sell off. Oh, stock market only goes up. We all know that. Never goes down. Proven fact. What else? Was it the IBB? The IBB's back above the 3-day moving or the 9-day moving average. Probably a good indication that this thing may go back and test 299 one more time. But I'm not seeing a lot of juice in this one. Light volume today. But again, I think any company that doesn't need cash and has some decent earnings is what everybody's going to pile into. And we're going to see EPSs with 30 to 1 or something. And when these things do not perform, the bottom's going to fall out of them. These biotechs are a prime example. If these things even flinch during the next earnings season, they are going to be toast. So while you may want to play them up to earnings, be extremely careful if you're anywhere around these during earnings, because they are priced for absolute perfection, much like Apple is, much like a Win is going to be. If they are not perfect, there is going to be a huge price to pay. We're going to look into some other stocks of interest, at least on my list. What do we have out here? A few that were given some kind of signals. I wanted to see what was going on in that. Anthem is one. He had kind of a nice little test, the low of a couple of days. June 27th, 122.91, 3.1 million shares, just with 1.9 million shares yesterday. A little bit of reversal here. We'll talk more about this when we return in brief moments.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
If you missed the beginning of the show, one of the biggest signals I was looking for today was a test of the TLT's confluence level. It did so on lighter volume. We're getting a bounce out of here. That suggests that at least the bond market is going to get a few days of respite. That may change with the FOMC meeting, but to me right now, being in the market is more of a gamble overnight than anything else. I don't have a clear indication what the Fed is going to do, although I have a idea, and that is talk hawkish, act dovish, and let everybody know that as soon as the election's over, they're coming for you. So that's probably going to continue to weigh on stocks that need additional cash, that will have where higher interest rates will hurt them and help them. And I think you can probably look for that. We did get to 2120. I'm expecting that we do retest that before we break out any highs. And as soon as the mad rush to get into many of these stocks is over, probably the question is, who else is going to be there to buy the upside of all these stocks that everybody's rushing into today? And that is the problem, is everybody is pushing everything, all their chips into the center of the table on these big caps. And they are just going to be less likely or less susceptible to the downside than others. There is lower hanging fruit. And as I pointed out, some of that lower hanging fruit is probably going to be in the small caps as soon as they bounce a little bit. We were talking about Anthem before we were rudely interrupted by a commercial timeout. Nice test of the lows on Anthem. The June 27th low at 122.91, 3.1 million shares. Tested it with basically 33% lighter volume on September 14th. That is yesterday for you folks in Lutz. Nice little reversal out here today. Volume is 840,000 shares compared to the 1.8 million shares yesterday. And if you're looking at here, some of these stocks could get some decent bounces. Got a couple of gaps down on heavy volume. But you also have very limited upside to some of these. In the case of Anthem, that would take you to 137.77, where you're going to have a lot of confluence, and that is right at this gap down that happened with 3.4 million shares on the 27th of August. So, can you bounce? Can you get maybe 10% out of these stocks? The answer is yes. Am I going to try to play something for 10%? The risk reward just isn't in it for me. Other stocks, we talked about Avid last maybe a couple weeks ago, and someone asked me what my thoughts were on this stock. They have not changed, and that is that this has come back down and lighter volume. So not a bad looking chart now. Energy wasn't all that exciting on the way back down. We've gotten back to this gap that I thought it was going to come to from, July 4th. Is that right? July 4th? August 4th. 2.4 million shares. We got into it yesterday for 600,000 shares. Got a little bit of a bounce. I just don't suspect that there's a ton in this one. Not a bad looking chart pattern, but if we're talking about fundamentals, Avid continues to be replaced by companies that are much more adapt to desktop publishing than HD high-quality publishing. Every week you get a faster, better video card that can compress and do stuff that Avid Technologies hardware has done for years. And it just becomes a whole lot less. And for the most part, it's not a live presentation kind of encoding issue. So as long as you can take your time, you're better off buying a $300 to $500 video card than a $10,000 Avid editing system to maybe make your video production for, maybe a decent sized company. I'm not talking about enterprise. If you got enterprise money, you're probably buying an Avid Technology thing. But, for years, this was the go-to thing to buy to make any video and non-linearly edit. I've worked on these systems before and edited out a lot of demo videotapes, especially in the 90s. Back then, it was all about Apple Macs on these machines. And that is a big problem for Avid, too, as Apple thinks less and less about the Macintosh and upgrading it and working with it. It also means that they're not putting in a lot of high-end video cards to make this work. And PCs become much more affordable for this position. So too much in Apple as bailiwick in their PCs, not in their smartphones. And again, kind of succumbing to the pressure from NVIDIA and AMD as they continue to make much better video cards. These video cards aren't for just viewing the output, but compressing them into MPEG. These things can be vastly much faster than the PC's CPU. One of the reasons why is these video cards basically, for the most part, work on 8x8 blocks, and you can have an entire video frame in the card at one time, and all 1,000 cores working on it. Maybe even several frames at the same time now with the higher video memory coming into it, and a lot of good stuff. But anyway, Avid Technology kind of dying on the vine. Can it bounce? Can it get some juice out of here? Is it going out of business tomorrow? The answer is no, but it's kind of a long-term slide lower, so you can look at it. Again, you can email me at 877-927-6648. Question, is it time to buy Nugget? I would say I would not want to get in the way of the Fed. The meeting, of course, is the next on Wednesday. Wednesday, you will also have a let me draw this again here. Wednesday, you will have a. Gotta guess I could get that fixed. You will have a. I want to say. A question and answer session coming out here after the announcement. But I don't know. I just don't see a lot of reason to get out here in front of the Fed on any of these things that are highly interest rate sensitive. But we will continue to think about that. What else is that? I just would be much safer. Like I said, I think the question is, what is the Fed going to say? And like I said, I think they're going to talk long-term, hawkish, short-term, dovish. And that'll probably be a nothing for the market, but certainly long-term, gold probably going to get one more step down on that, and maybe a good opportunity to buy it after that meeting. We'll be back after this short timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I was talking to Basil IME in here, and I designed. We had some video cards that ended up being bought by Pinnacle Systems, and then Pinnacle Systems was bought by Avid. So by proxy, the company I worked for in the late 80s through the 2002 pretty much had some blowback into that other one. But that's it. What else do we have going on here? Well, we wanted to look at some other stocks. What else out here? Crocs, interesting lows out here. Nothing so far, but you had a huge down on earnings. This thing on 8.3 came down with 8 million shares. So you kind of got into it. Just the nice thing is 6 million shares yesterday, 476,000 shares today. You would like it to test this $7.63 low. I don't know. This seems like a summertime shoe kind of thing. So maybe this is the wrong season. I'd have to look a little bit into it. But so far, you did gap up on, on May 10th with 10 million shares, got back into it with 8 million shares on July 3rd, August 3rd, and now into it with lighter volume. So this is the way it goes on. It may take a little while out here, and even into next year. But, other than the huge blow down here, I don't know if these things are going to come back in style. These things tend to be kind of secular, and cyclic out here, but we will continue on. OIS had a kind of interesting signal on the short term. Didn't see anything long term out here so far, but kind of a triple bottom. This $28 level is acting as support. You had higher volume on the July 27th low of 1.8 million shares. That was 28.56. So you're going to come back there and retest it. You actually did on 470,000 yesterday. So not a bad deal. Energy also looked a little bit better. The August 18th high to the September 14th low came in about 15 to 20% lighter energy in OIS. So not a bad looking chart out here either. I'm not going to go Frogger on this because I think the upside is limited. But is it, would I be short probably oil right now? And the answer is no. I think a lot of sideways action out here. We're going to need some kind of other thing going on out here to actually get it going. Again, you can email me at path@tfnn.com. Call me at 877-927-6648. What else do we have out here? Team Health Holdings, TMH. Should be TMI, too much information. 33.15, which is your February 9th low, 1.5 million shares. Kind of got into it. It's drifted down lower. You would want this to close back above 33.15. But pretty light volume out here. Had a little rally back above it, back below it. And you continue to see kind of the same energy up and down. So could you get a bounce out of this? The answer is yes, but I don't see a lot in that one. T. Rowe's price had some nice little bottoming action. Gapped up back on the 12th of February. The volume wasn't all that exciting. He came down with heavy volume on June 27th at 2.4 million shares. Dissed with 1.8 million shares on the 12th of September. Yesterday, pushed down with 1.3 million shares. Today, up on 600,000 shares. That is the problem out here. No real sign of strength, and that becomes problematic to be long. So I kind of have to wait for a signal on a lot of these to figure out. If you look at my power law vector number, if you look at the move from April 26th down to June 27th, and then the one from July 14th back to September 12th, energy is about the same. So energy did not really pull back that lightly. You had a couple of moves out here. Would I go short it? The answer is no. But at the same time, you probably limited your upside to the 72.50 to 73.75 gap-a-roonies. You've got a double gap out here from 7.8 and also on 7.25 to 7.26 with a gap down of 3.3 million shares. So maybe a trading range of about $4 in T. Rowe price for the broker dealers out here. UNFI, United Foods. This one looked like one of the better looking stocks. Energy did pick up a little bit more than you would like, but this has done just about everything that you would like if you want to be long a food company. Probably a little less interest rate sensitive than others. UNFI gapped up on June 7th with 4.9 million shares. As we've come back into this gap, volume has been, I think he had one day with 1.8 million shares, 2 million shares the next day, 1 million shares yesterday, 300,000 shares today. Pretty light. Can't imagine, I don't know when earnings is coming up on that, but not a bad looking stock. So we will continue looking at here. Like I said, though, I just don't think that there is much gas left in the tank. We're only 2.3 billion shares as we come in to the late part. I could be short Wednesday night all over again in this market after the Fed gets out of the way. But we shall see. What else do we have out here? WFM, which is another food market company. That's why I was saying we see a little bit of a pattern out here in these food companies. WFM has been bouncing along this $27, $28 level for a while. You had your high volume low on November 5th with 28.73 million shares. Gone below it with lighter volume a few times. Come back into the trading range. Energy did gap down a couple of times, kind of hard. You're trying to get back into this trading range. But this consolidation range, about $6, $6.50, something like that, looks rather interesting. You did have a high volume gap down back here on the 7th September. I like the other one a little bit better. UNFI is just as far as the chart goes. But both of these are telling us that the energy down from the July 25th high into the September 4th low on WFM is a little lighter. So maybe things, holiday season, people buying more stuff. I haven't been in any of these stores, so I don't know them that well. But a lot of times in sideways markets or quiet markets, you can see these moves. The limited upside to WFM would certainly have me looking at UNFI a lot harder than any others. You got gap up here, what, at about $50? That's a 25% move. That one would interest me a lot more out here in this, but I'd have to research it further. I'm not saying buy this one. Just interesting chart pattern at the moment, and like it that other stocks in the same sector have it. We will be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And of course, as we go into Friday expiration day, I thought that there was a good chance that the TLT would take out this confluence level. It has gone into it. It's gone into it with lighter volume. It looks like it's going to close back over it. But my guess is that that is a short respite, and we will have to wait until after the Fed. Of course, that's next Wednesday at 2 p.m. And then I think, 2:30, they get into the question and answer session. And then about by 3:15 Eastern time, we're kind of done with that. But my guess is that we've got a lot of positions locked up until then, looking for lighter volatility, maybe a little higher in this market. But I can't imagine that there's much more to be had out here. Everybody's flooded in to the safety stocks, or at least what they think is safe. Apple, the gambling stocks, send stocks, and this may be as good as it gets. We'll watch it over the next couple of days. I'm just thankful that maybe I get yet another bite at the apple if they can push this market up a little. As long as the volume continues to be light like today, 2.3 billion shares, we should be coming into the home stretch here. I should be seeing something like 3.2 billion shares if we were going higher. This is going to be a very light day up. And again, I just suspect we go lighter into Wednesday, and I get yet another swing at bat. So going to be sitting on my hands, other than maybe finding some last-minute options to buy tomorrow. But I think most of the volatility has come out of this market today. As I said earlier in the show, we cleaned out our positions earlier, and I am now 100% cash, waiting for some kind of way to get my back up against the wall to trade this. I just don't think that there's much higher highs or higher lows through Wednesday. Of course, Monday is probably mostly options rollover into a little bit of Tuesday. Tuesday, probably by 12, 11 a.m., volume will go light. It'll be light on Wednesday morning. And, of course, we probably won't have decent volume again until Wednesday afternoon. So good time to spend a lot more time with charts, looking for setups and how these stocks react to what's going to happen next week. But back to the military, and I'm sure Tom can talk about hurry up and wait from his days in the Marines. But that's a lot There's going to be a lot of hurry up and we are in this lower trading range. We did break it with volume. We are rising on lighter volume. I just suspect we've got a few days out here of nothingness, wandering in the wilderness until we get some additional guidance from those on high, our betters, the Fed presidents. What do we have? Just about a minute left here. Again, look at that TLT chart today. If you have not read Tom O'Brien's book about confluence levels, great time to take a look at that and the TLT. Also, the good book on that, if you want to get a little deeper, is Joe DiNapoli's book on it, although it's fairly expensive. Just keep an eye on it. But great patterns out there. We've shown them the last couple of days. And, if it doesn't break it, you can always get out. You can always get back in. So we'll see if that develops over the next couple of days. I will be watching like the shadow. I know all. The shadow knows all, doesn't he? In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow for options expiration. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.